Good evening, traders and investors. Will back here with another one, coming to you with a Wednesday market recap. Hopefully you guys had a very good day in the markets today, and wishing you all a very nice Thanksgiving long weekend coming up. Markets are closed tomorrow, and we'll have a small little half day on the Friday session. So hopefully you guys are able to get some rest, some relaxation in over the course of the long weekend, and are ready for a crazy another week in the markets next week. In terms of today's action, though, SPY, QQQ, and most of your major sectors ending in the green again. Market breadth is definitely turning around at this current stage. We have a very nice engulfing move on the S&P 500, eclipsing the highs of Thursday, kind of erasing this daily downtrend with a nice engulfing move and putting in a lot of space between us and those fear lows. The Qs as well, putting in some decent space between us and the fear lows, an engulfing move of its own. Not as good as the S&P, but still very, very strong. And I will remind you guys, we are still somehow in extreme fear territory right now, although the market breadth has been significantly improving. You'll take a look at that right here. The percentage of stocks above their 20-day EMAs. Look at this massive push all across the board. That is what you like to see. Percentage of stocks above their 20-day EMAs now standing at 64%. So at least we don't have any more of the concentration risk that we had a few weeks ago, which were some of our concerns coming into the early stages of the month of November. This is looking very good, guys. You haven't seen this level of breadth, arguably, since September's, when markets were in full bull motion. Moving on to the percentage of stocks above their 50-day EMA, now 50% of all stocks are back above there too, showing some breadth not only on the short-term momentum timeframes, but recapturing this very important institutional level, which is known as the 50-day moving average. Additionally, as well, the heat map looking very solid, broad market performance, just reiterating what we were seeing across the various breadth indicators that I just showed you right now. But all in all, there wasn't really much news today. Now, we will be having some big news as of next week. Next week, we get the ISM manufacturing PMI on the Monday session, followed very closely by the ADP employment change coming up next Wednesday. But there's a bit of a catalyst vacuum for the rest of the week. We don't really have anything on the Friday session, and it's a half day. It's Thanksgiving week. The volume will probably be low, so I'm not expecting too many crazy surprises. And then next Friday, though, we get the core PCE and PCE inflation read numbers. Those should be pretty important for the markets overall. But one thing that we get next week that not many people are talking about on December 1st, guys, is the end of quantitative tightening. That is going to be extremely interesting because we know that the Fed has been in a quantitative tightening cycle now for the past 3 years, and that is all coming to an end. And this will provide some very good liquidity to the markets. They've been running off the balance sheet quite aggressively here over the past few years. And this is a balance sheet adjusted to the GDP ratio, which is a better indicator of just looking at the balance sheet alone. Because if you look at the balance sheet alone, of course, they'll have more securities than they did at one point during the, 2020 lows, essentially, right? So overall, though, the balance sheet runoff will provide a nice liquidity event to the market. And then in 2 weeks' time, you get another positive catalyst for the market, which are the possible rate cuts. The odds of a rate cut as of right now are 85% for that 10th of December Fed meeting. So those will be the biggest things to watch out for in the next few weeks as we currently embark on a broad market rally with a lack of bearish catalysts. We've had all the bearish catalysts recently. Just to reiterate, right, the ones that we were looking at recently, the AI bubble and the breadth and the concentration risk, that was largely the issue when we started selling off here at the early stages of October. Then we went into bearish catalyst number 2 and the government shutdown and the data dump, or rather now, lack of data, the October jobs report and October inflation numbers, possibly to never be released, which was the phase 2 of the declines in the market overall. But now we've kind of ran through some of those issues, and we will be getting some liquidity structures from the end of the quantitative tightening cycle and possibly another rate cut as well. So now you're starting to see some of the bullish tailwinds starting to eclipse some of these short-term bearish narratives that we've went through. Other than that, there wasn't really much news today, but we did have some very interesting pieces across the board in terms of some statistics that we were seeing today. Number one has to be this one right here. Hedge funds recording their largest 2-day net purchase of US equities since May on November 21st, which was Friday, and 24th, which was the Monday session. This was the biggest 2-day buying period over the last 2 years. Some of those purchases included largely index futures and ETFs, which were 56% of those buys, and then 44% index futures was 56 and ETFs were 44%. So still a lot of ETF buying, but a lot of individual stock buying too. The information technology sector led the overall activity, with the hedge funds increasing their long exposure across most subsectors. Look at that buying by hedge funds Friday and into Monday as well, literally kind of at the bottom of the most recent move. Other statistics today, which are very interesting, is this one right here. The fact that AI could automate 57% of US work hours. Now, of course, this will be progressive over the next 5 years. However, 57% of work hours could be worth up to $2.9 trillion a year by 2030. Now, of course, that is not very good for the overall labor market in terms of labor statistics, but we've been talking about this for a while, right? With every industrial revolution comes a need for new skills and repurposing of current skills. As unskilled labor kind of loses their jobs to automation. This is literally a centuries-old thing. It's been happening over and over, and this is the most recent iteration of one, but I found these statistics quite staggering. The title, Agents, Robots, and Us. In other news today, we had this right here. We've been commenting about this, the battle between the Google complex and the OpenAI complex led by NVIDIA. You can see a very big divergence here, which started happening at the beginning of the month of November, to where Google, Broadcom, Celestica, and everything in the Google complex of suppliers for Google's TPUs and Google itself having phenomenal rallies. Now, these two charts were kind of doing the same thing. They were very correlated, and then oops, we saw a bit of a correlation break as people started to question how OpenAI was going to pay for all of its outstanding deals. And if NVIDIA's GPUs were still the kings of the entire space, NVIDIA, SoftBank, Oracle, AMD, Microsoft, and CoreWeave, Microsoft coming down, of course, because of their affiliation with OpenAI. Now, I would expect these two charts eventually to reconverge into the future, but this discrepancy is pretty notable. The way that I'm playing this is taking, if I had some call options or stuff like that on some of these names, taking some off here and rotating into some of the names down here, because let's be honest, a lot of these are very solid companies with huge forward growth rates, namely NVIDIA, AMD, and Microsoft would probably be my favorite ones. One last piece of news for you guys, and this time for crypto. JP Morgan predicting a Bitcoin price could reach $240,000 in the long term, framing it as a multi-year upside case rather than a base case scenario. Now, we've been talking about this, guys, in terms of the crypto sell-off recently. A lot of retail investors who are used to the 4-year cycles are used to the terms crypto winters. Well, you guys got to get used to the new reality of Bitcoin, as JP Morgan has been saying, and as I've been saying on the channel as well, right? The liquidity in terms of where it used to be. It used to be VC style, retail driven style. And now it is more in terms of a tradable macro asset class that is closely tied to the performance of other asset classes, such as the S&P, the Qs, and the small caps overall, backed by institutional liquidity, with BTC now more tied to macro trends than the traditional 4-year halving cycle, as I was commenting about this several times over the course of the past 6 months since we've had the ETFs and so much institutional liquidity, right? I do believe, guys, that we can't think about crypto in terms of cycles anymore. It would be very awkward if the S&P and the Qs continue pushing throughout 2026 and Bitcoin just goes into its own little bubble of a crypto winter, right? Doesn't usually work with that like that anymore. Institutions have been taking more and more of a percentage of total Bitcoin holdings, and as a result, you probably don't expect the massive sell-offs that are a byproduct of VC-style investments, retail leverage as well, because when those people get liquidated, who accumulates those positions? Most often, it is the institutions, and they are long-form holders. And trust me, they probably do not believe in the 4-year halving cycles either. So those are a few of the notable events that happened today in the markets, and a few curious pieces of news that I thought would be interesting to bring to the channel. Now, in terms of the rest of today's video, we're going to do a few things together, guys. It's going to be a shorter video. We're going to run through our indexes, take a look at where is the rotation in the market. Well, we know that it's very broad-based, but out of these sectors, which ones are currently leading, which ones are currently lagging, and which sectors could be the best in terms of positioning for the near-term future. Thereafter, we will do the same thing. We will take a look at our big tech list down here and derive of these stocks, which are very good long-term portfolio opportunities and or possible swing trades for the short, medium, and long terms. So at the very end of the video as well, we will take a look at the biggest gainers and losers of the day. As usual, guys, there are many solid companies on the lows right here, some of which I want to have a closer look at because they could be some interesting opportunities down here. And then, of course, we had some very nice performance at the top side of the market. A lot of names coming up, 4, 5, 6, 7, 8, 9, 10%. You can see Robinhood all the way up here. We were saying that this one would be an interesting position at some of these lows. So congratulations if you're able to kind of build a bit of a further position in Robinhood, but many other names could be very curious to look into as well. So we will take a look at the biggest gainers and losers of the day at the end of the video. No portfolio update for today. I did a massive one yesterday, so check out yesterday's video. I'll do the next portfolio update as per usual on the Friday sessions. So that's going to be it for today. Let's jump right into it. The SPY up 0.7, the Q's up 0.9 almost. A very nice day of market breadth. Most of all of your indexes participating to the upside. Some weakness in software here. CRM, Intuit, ServiceNow down because Workday unfortunately printed some pretty poor earnings, which just puts more pressure on this software category. Software category, man, has been abysmal this entire year so far as they continue to battle against the AI narrative. Now, that being said, because of Zscaler earnings, we had some cybersecurity names come down, and we'll take a look at those at the end of the video because I do believe that some of them are coming into some pretty decent territories here for some possible buys. Other than that, big tech was fairly mixed. Google finally coming down a little bit, but you had NVIDIA, Microsoft, Tesla, and a few other names there to kind of pick up that slack. Financials, very solid today. Healthcare took a bit of a breather. I mean, I guess they took a day off. They were kind of tired of carrying the entire market on their backs for the past few weeks. So today they said, you know what, we'll take the day off and we'll just allocate the money to the rest of the other sectors. And the bottom half of the market getting a lot of love. Consumer defensives and some of your consumer cyclicals moving a bit higher today. On the heat map, only 1 day relative performance, you'll see that even better, guys. Most of all your sectors notably higher, and this has been the case over the last 3 days of trade this entire week so far. Only communication services getting left behind, but that is largely because Google and Meta were slightly down today. Moving on further, the 1 week relative is now a lot better than it has been in the past few weeks. All major sectors except for energy moving higher. Communication services was the biggest winner this week because we had some nice rallies off the lows from Meta and Google, although they were red a little bit today. Technology still at the bottom of the list though, so still a trade that's sold off a lot. It hasn't really recaptured some of the highs from early November previously and end of October as well. 1 month relative, guys. I mean, you're getting some pulls away from healthcare, right? But you can still see that there was a lot of damage done throughout the early stages of the month of November, and the market is still trying to claw back some of those losses, right, across the various segments of the market. Now, in terms of the rundown for your technical analysis, since we're done all the news, we're not going to cover earnings today. I'll give you guys a break on the earnings, and I'll give myself a break on the earnings as well, because we go through like 30, 40 different companies every cycle so far. We've been focusing a lot on the charts, and I think the charts matter a lot, especially when you're looking at a possible trend pattern reversal for the end of some weekly consolidation into big liquidity generation events for the market. December 1st, quantitative tightening, which will be ending, big liquidity event for the markets overall. And then about a week and a half later, you are going to probably get, 85% probably a rate cut on December the 10th. So could be very attractive for the markets. In terms of your structure right now, we were looking at the size of this bounce. The size of the bounce always matters, guys, because you only know that the trend is reversed when they confirm the new daily uptrend. Now, step number 1 is gauging the size of the bounce. If it's a shallow bounce and you lose your short-term hourly timeframes too shallow into that bounce, well, the likelihood of a rollover is quite pronounced at that point. But when you get a very solid bounce like this, guys, the probabilities now shift to a bit of a trend change for the bulls. Nicely above our support right now, 674 down to 666. If you get a bit tired on the Friday session and you want to fill today's gap, you would come right down into it for the good old breakout engulfing move, retest, and possibly reset the daily uptrend. Looking very solid. The daily MACD is now crossing after being down almost for an entire month. The entire month of November, finally crossing in terms of the daily momentum, now clearly above all of our moving averages again. So we've recaptured a few big things right now, guys. We have recaptured, right, the most recent leg of selling. We've recaptured the moving averages. We've recaptured support. So the odds do favor bullish expansion, even though it may not be a straight line expansion. You do favor a bit of a daily uptrend recapture. The weeklies right now, we never lost the weekly time frames. We came in at equal lows, crushing the 12 EMA ever so slightly here, perfectly into our support area. And now the bulls are looking to make quick work of this. So we will see, as I was saying, man, weekly MACD, when it crosses, it doesn't mean that you're going to head straight negative. It just means that it might just be choppy for a while. There's tons of events in the markets where you can see the weekly MACD cross, but you don't go into a full-blown, disaster of a bear market just yet, right? It just means that things got a little bit hot in terms of momentum. Momentum kind of slowed down. You finally got a little bit of the breakdown here, a bit of a consolidation phase in the markets. And now, once we've resolved most of the short-term bearish narratives, we can complement with some bullish tailwinds as well. Well, usually our market finds a bit more clarity and a bit more direction, especially now that you know with the statistics that I showed that you do have the big money buying at very rapid paces as they attempt to catch up into the end of the year. Moving on the Qs right now, same concept on the Qs. It was a daily downtrend. We've now eclipsed the most recent highs of last Thursday's sell-off. The MACD is now crossing on the daily as well, which leads us to believe that momentum is shifting. Market breadth is very strong. Not all technology names have been printing recent highs, but they're starting to curl around, especially all the ones that have sold off significantly over the past month of trade. That being said, nice recapture of a few things right now, right? Recapture of the momentum, recapture of an engulfing move, possibly leading to a trend change attempt by the bulls, recapture of support and the EMAs as well. This is what you want to see. This is what you call confluence, right? Where more than one thing shows you that the bulls are possibly looking to get this action back in their own favor. Looking very good there. We will see if they can confirm. The weeklies were lost, but never closed below. So we had a big loss of momentum right here. It's up to the bulls now to get it back. If they can do it in one step, that's the best case scenario. Maybe it might be a bit choppy in the next few weeks and we get a two-step recovery process towards the all-time highs, but everything considered looking very good, especially and possibly only if the market breadth continues to be this strong, right? You need the broad market to come back, not only concentration. If not, you're going to come into the same risks that we were describing at the end of the month of October, which led us to take buying power off of the table, right? To take some chips off the table and wait for these bearish short-term catalysts to resolve themselves. And you see, guys, it's taken like 3 weeks, possibly a bit more than 3 weeks to kind of get through the short-term bearish narratives, right? Moving on to the XLF financials. Well, the timeframes are a bit of a mess right now. The bulls are trying their best at the daily uptrend attempt into resistance right now, 53 down to 53.30 down to around 53. It's a small area, but a notable area nevertheless, right? A lot of price action in this range. So if the bulls cannot get it done in one clean shot, you're looking for the higher low and the trend change attempt or rather the trend change continuation. It's been a weekly downtrend, so you need to engulf this move overall and keep this weekly going. That would only happen if you get this daily uptrend follow through, of course, smash through this resistance area, and then we can say, okay, maybe your monthly higher lows are set, and maybe with the quantitative tightening ending, and also the further rate cuts, well, your banks are going to be set up pretty well, and a lot of other financial players will be set up pretty well into the end of the year and into 2026. I'll remind you some of the favorite bets we've been raising on the channel recently are names like Visa, names like MasterCard, names like SPGI, names like Moody's Corporations as well, right? Names that haven't really done too much over the course of this year, but will definitely benefit from those rate cuts and possibly the liquidity injections overall into the markets, to which financials usually respond pretty well. So notice how I'm looking for lagging names. I'm looking for lagging names across various sectors that have bullish long-term tailwinds behind them. Very solid companies nevertheless. Moving on to XLV. Look at this monthly chart on XLV, man. What a monster, right? Beautiful move by XLV. XLV bulls, maybe a little bit tired today. Overbought RSI, completely normal. We are at the previous all-time high region. If we cannot break above and we start to flatten out a little bit and go down, well, anything above 151 looking for a new higher low, possibly to continue the uptrend, looking very solid. And even if you unwind, guys, and head into a daily downtrend, is it that big of a deal? No, look how much space we have on the weeklies. Anything above 143, looking for a new weekly higher low, which would possibly be a nice re-entry opportunity. It's a bit tough to chase healthcare up here. I mean, I was pounding the table all the way down there on healthcare for like months and months, building leap call options. Hopefully you guys ate very well on those leap call options. It's been a slow one, but in my opinion, it was a pretty sure bet because it was lagging so severely behind the S&P, man. When you have a big sector like this lagging so far behind, guys, this divergence usually does not last forever. Look at that divergence. That was crazy amounts of divergence, right? Crazy, crazy, crazy amounts of divergence. It only lasts for so long, and eventually it tends to catch up pretty quickly in terms of velocity. So keep that in mind when you're looking for lagging sectors overall. Moving on to SMH right now. SMH also with a very nice move, engulfing move off the lows, daily downtrend on some of your semiconductors, right? Engulfing move looking very good, but not all stocks are built equal, right? A lot of these names didn't really pull back too much. Micron pulled back a little bit, But in the context of a monthly, did it really pull back? No. Names like ASML, even though they're not in the S&P, they didn't come down and test our levels specifically for a re-entry, right? So some names just didn't give us a deep enough pullback to really fire off those swing trades with size, but other names did. Names like NVIDIA pulled back decently, right, into some previous structure down here in terms of the weekly charts. Names like AMD also, another one of my favorite names, didn't pull back quite to the level, but very close. Closer than something like a Micron, right, on the monthly time frame. So it's all relative. Micron's all the way up here. EMAs are all the way down there. Now, it might be cheap still fundamentally, but building some like big leap call options or things like that, I like to see a better retracement size. So I'm picking and choosing these semiconductor companies that I'm swing trading right now for some leaps and other things of that nature. But overall, the semiconductor niche not looking too bad, recapturing some of the daily EMAs, bullish momentum, possibly on the table into next week. And you want to see the daily trend change being established to set the weekly higher lows in stone and possibly go for the all-time high retest into the end of the year. Moving on to other things right now, moving on to the Russell. The Russell up about 0.9%. The Russell has really enjoyed these rate cut odds coming up every single day since those Thursday lows. Look at this move on the Russell. Very, very strong, right? Daily downtrend, big engulfing move. And now if you get a bit of a retracement down, you guys know exactly where we're going, right? Right back to this area that we were highlighting for a while. It acted as support for a while. Now you broke through it. The EMAs are down there. This is a nice confluence area for some possible swing trade longs if you're interested in that. Overall, the weekly, the bulls have to recapture it because we lost the higher lows, right? You lost the lows. Now they got to do a good job of getting it back. And the monthly perfectly came down and back tested our region. So nice little back test on the Russell, right? I'm not playing the Russell specifically. I'm picking and choosing which small cap names I am playing individually, right? But still, small caps leading into some rate cuts is usually a decent proposition, but it's a longer term expansion thesis, 2026, 2027. The one thing that stands between you and big small cap gains, of course, is a possible recession. But short of a recession, if you get a soft landing scenario, small caps can have a lot of catching up to do with the overall markets because we know they haven't really done anything in the last 4 years, right? That's it for your overall sector rundown. We'll take a look at the other stuff coming into Friday to do a full market recap. But you guys should get a good idea of where we are right now. The VIX, I mean, this was a whole bunch of confluence. We talked about it all week in all the videos. So I won't be going as deep into the analysis in today's videos as I have been going in the past week when we were going through it, right? But when you see maximum fear and greed, right? When you see a lot of a big spike in the VIX, when you see so many breadth indicators at their lows, you guys got to understand, man, you got to take advantage of the high VIX either from selling some put options or possibly buying some shares in your favorite companies for your long-term portfolios. Usually it always is a very good time to buy. And now very rapidly, the VIX has just unwound everything and we are back down to before this all started pretty much, right? So 17, so still decent in terms of selling some put options, but most of the buys and most of the options should have been followed up back here. Now that the VIX is a bit lower, well, now we can see what's left, right? Now that the storm has blown over, now that the VIX is a bit lower as well, well, now we can take a look at some of our favorite companies, maybe some that haven't rallied so much off the bottoms. Now that the volatility is lower, well, maybe it's the time to explore buying some leap call options on names now that you're not paying as much IV as you were up here. So keep that in mind. Moving now into our, I guess we could talk about the yields and the bonds. We haven't done so all week. Nice rate cut odds to the downside. As a result, your yields are plummeting, but we were always saying this, right? Weekly downtrends on your yields. I think the trend is very clear on the 10 and the 20. It just needs the final push from Jerome Powell on December the 10th. And as a result, your bonds are kind of resuming their little uptrend that they've been building here over the past few months. The bonds, very slow trade, could be an interesting trade into 2026, especially if Kevin Hassett is going to be the new Fed chair, right? That's something that I didn't talk about, but he's pretty dovish on the rate cuts, right? Obviously, part of the Trump administration, of course. So if Kevin Hassett becomes the new Fed chair, you might expect him to push very hard for some rate cuts into 2026. I still like this trade into 2026, but it's not going to be a Palantir, right? It's going to be slow and methodical and possibly up and to the right. Moving on into gold right now. Gold having a very beautiful day. 0.8% on the close right now. Not too bad. Daily small little uptrend is still in motion. I mean, they tried to go for the one shot, couldn't get it done. So now we're back into a more mini daily uptrend, but the weekly time frame doesn't look too bad at all. We just established some higher lows, and now you're looking for kind of the trend continuation right there. Not looking too bad. We've been talking about this one all along. It's a bit late right now for a long, unless you have a very long-term time horizon, of course. But we were looking for some positioning for some swing trade longs with a stop loss below here and looking for the expansion going into 44, 4,500 psychological. Decent risk to reward trade. You were a bit late right now. So if you're entering here, your stop has to be a bit tighter than the one that we got down here for down here, because if not, the risk to reward just doesn't justify itself, right? I've plotted this a few times, but some of you are new to the channel. Welcome if you are new to the channel, right? So your take profit is up here. Let's just call it 4,500. If you're going for psychological expansion beyond the weekly highs, right? You can see, right? If you put the stop loss where I have mine, but I have a better entry, well, your risk to reward is kind of trashed, right? It's like a 1.26. But if you're using a tighter stop loss, right, because you have to, because only then it makes sense, you get a 2-to-1 risk to reward. So the gold trade is still on the table. You are a bit late, but you can possibly justify this if you're trading with a tighter stop loss. You don't want to trade with a too wide stop loss, because if you get unwound right here, right, well, that just means that we might just be going into a bit more weekly consolidation, something that kind of happened back here, and it might just be a little bit slow. So moving on to our Bitcoin and crypto names right now, Bitcoin and Ethereum started off the morning very slow, then came alive in the afternoon, guys. So Bitcoin and Ethereum making a bit of a push, but we know who's in control right now. Well, of course, it's the bears, right? But that liquidity event on Monday, December the 1st, quantitative tightening could be good for the crypto landscape. It maybe will take it in stride, but look at the size of the bounce, right? We can't confirm anything, right? 38% bounce. So it's a decent bounce overall. We have desperately held on to the... We cut it in a big fashion, man, you know, but we're trying to hold on to the weekly candle closes right here. We're desperately trying to hold on to this, you know, whole $90,000 to $88,000 little range here that the bulls are building, but the damage has been done, right? In my opinion, it's going to be tough for the bulls to kind of recover this. All of this, I mean, this would be one of the craziest crypto rallies that I would have seen in a long time if we do recover that by the end of the year. In my opinion, it just may be a little bit more slow as people have a bit of cold feet right now in terms of positioning, right? Everybody's expecting this. So I guess people are still kind of wary about positioning here, at least until you recapture the daily uptrends. But a bounce is a bounce. It's the start, end of daily oversold conditions and possibly a MACD cross. So maybe we can get this bit of a daily uptrend in motion right now. Keep in mind, if you're calling this the bottom, you better well have a stop loss down below here, right? If you're targeting expansion to here, I would understand TP number 1 and TP number 2. It would make sense, but please put a stop loss, because if you get unwound, guys, right, you're just heading back here into the $75,000 range. And the same concept for Ethereum stands as well. If you're trading this one on the short term, trade it with a stop loss below these lows, because you don't have any time frame control here. No daily uptrend just yet, right? So we can't put a stop loss higher. And also the weekly has been in a structural downtrend here for a while, arguably since the top of the month of August. And as a result, big monthly consolidation. So I mean, crazy moves have happened on Ethereum. Whether or not we get another one into the month of December and January is a different story, right? But as of right now, it's very tough to confirm that the bottom is actually in without at least some form of a time frame confirmation on the dailies, right? So Ethereum and Bitcoin, I'm still accumulating for long-term thesis positions, but any short-term swing trades could be a little bit dicey, even around these ranges. You know, you can attempt them, but as long as you keep a stop loss down below there, just to be safe overall, but not looking too bad in terms of the recent motion on those names. That's everything for your overall market rundown. Now let's dive into our big tech names. So moving on into Apple, we'll do these quickly because we spent a lot of time on these charts all throughout the past 2 weeks. So now you guys know what my preferred plays are. I'll reiterate them today, but I won't be going as deep as I have been in the past few videos, just to save some time, right? Because not much has changed. Apple, beautiful daily uptrend. If we are looking for a higher low, anything at this point above 265, looking for that good old higher low, possibly coming into these guys, bit of a back test and maybe run. If you see that back test, there is a opportunity for a greedy swing trade long, but should not be tempted with too much size, just because your daily is almost overbought. Your weekly is definitely starting to be a little bit overbought. And we're kind of far away from the moving averages, right? Very far away, but Apple's been having a very good quarter, and they should be having a very good Q4. That was their guidance during earnings. Apple, tough buy for me all the way up here in terms of an ad for the long-term portfolio. The fundamentals are just a little bit stretched, and the price a little bit stretched as well. The last time that I picked up Apple was down here, and I really have not added ever since. I'm not selling anything though, but I'm also not going for some big leap call contracts either, because the price and the fundamentals just aren't lined up for that type of trade, at least for me. Moving on to AMD right now. AMD, phenomenal price action today, another up 4%. So the bulls are trying here, right? Daily downtrend. You got the high, you got the equal lows. If they breach this level, right, you are going to go into a new daily uptrend, which will symbolize that the weekly lows are probably set at that point in time. And we never lost the weekly uptrend, right? It's been messy, but we never lost it. The weekly higher lows are all the way down there. We did not go for the fill down to the support area right here, but still, I've been saying that AMD has been a big pickup, even around the 200 range, or even selling some puts down there. Their valuation in around 200 is very fair, in my humble opinion. You're trading around a one peg, and you still are trading around a one peg. And if you guys believe in the AMD long-term thesis, it's a decent area to be picking up some shares. I'm not personally adding to my leap call contracts because I got in here, but if I didn't have any, and I was looking for a trade that has a lot of lift in the next 2 years, this would probably be front and center, especially on a nice 20% pullback. I mean, the EPS speaks for itself, the revenue speaks for itself, and Lisa Su's guidance on margin improvement recently also speaks for itself too. So I do really like AMD around these levels for some longer duration call options, or possibly some longer term shares as well. Moving on to Amazon right now. Amazon down about 0.22 today, but then again, they're bouncing out of resistance. 240 roughly down about 230, let's call it, right? It's a bit under, but still, right? A couple dollars off doesn't matter. You guys get the idea, right? Big daily downtrend. We will see. As of right now, the bounce size is not the best. It's only a 38.2% bounce. You would like to see the bulls get a little bit more of this, right? To really set themselves up for a possible trend change. The best case scenario is just get through this big resistance zone in one clean shot. I don't know if they have the juice, but if ever we come down here a little bit, I will be selling some put options down here, buying some more shares for my long-term portfolio. I mean, if they want to keep giving me Amazon, man, while the fundamentals keep improving, they're going to give me the same price to accumulate even more shares. I'll take them. Amazon for me is a nice leap call contract trade right now, and also a great addition for some long-term shares because around 220, man, the valuation's been getting better and better as they keep improving their fundamentals, strong earnings, and a very decent valuation at 220 or at a 28 forward price to earnings, a 1.4 peg as well. And the price has just been doing nothing for the past 6 months while the company's been improving guidance and improving fundamentals as well. So this one I like very much. The technicals and the fundamentals line up, gives me an A+ trade setup. Moving on to Google right now. Google pulling back a little bit today, but I mean, they deserve it, right? They've been carrying for so long at this point in time, daily overbought conditions, weekly overbought conditions as well. So going long Google here is a very greedy proposition, not only on the technicals, but also fundamentals, right? Around 320 are currently trading a 29 forward price to earnings, which is not objectively bad, but in terms of their EPS growth rate, it's a 1.91 peg. They went from one of the cheapest stocks in terms of a peg ratio to one of the more expensive stocks in the Mag 7 right now. It's been a phenomenal run. They have very good fundamentals. Their Gemini 3 model is fantastic. I'm not selling any shares up here, but I'm probably not buying any more at this current time. Technicals are stretched. Fundamentals are not terrible, but you can't really call them cheap anymore in terms of Google, right? So if you do pull back a little bit more, a logical location would be maybe down here back to 300, anything above 271, looking for a higher low, maybe to continue. And even if we unwind into a daily downtrend, which would be the first of its kind in a while at this point, right? You're just looking for a weekly higher low, but we are very extended on a lot of time frames here. Extended on the weekly from the 12, very extended from the 12 on the monthly time frame as well. So Google, no longer one of my favorite buys. It was a big buy this entire region, and now we're kind of swimming in profits. So, you know, if ever you have a trading portfolio, right, not a long-term, because I don't really sell or trim my big winners, especially if I have a long-term time horizon, guys, I'm going to be still in these markets for the next like 20, 25 years. If I have a great cost on Google, I see no reason to sell. But let's say I have a trading portfolio with shares and I made a lot of money on Google and I want to trim some Google exposure for trading and plop it in to some other names that are low. Could be a good reallocation phase right now into some other names, kind of like this one right here, Meta. Meta down about 0.41%. They had a nice bounce over the past few days, and now encountering a bit of resistance, 640 down to 622. It's not the biggest level, but it's the closest one that we have, so there is a bit of price action happening right now. In terms of the bounce, well, this has been a daily downtrend. Most recent leg of selling started here, and now we have a 100% retracement size, so the bull's working with a ton of space to reset the daily uptrend and possibly put an end to this weekly leg of selling, but the bulls have a lot of work to do, man. Once you reverse the daily, you still got to get me the weekly back as well, right? So it's a weekly downtrend as well. So in terms of short-term trades, it's a bit tough, especially when you don't have confirmation about your lower time frames, but a nice bounce out of support right here, 600 down to 557. The way that I be playing this is for longer-term stuff. Since we don't have short-term trend confirmations yet, right? It's a bit tough. You know, unless you're putting a stop loss down here and you're very aggressive, you're saying, listen, I'm just going for it, stop down there and looking for the big weekly recapture over time. I mean, it makes sense. It's the aggressive approach. Someone more conservative would wait for the daily time frames. That way, when it does happen, right, you enter on the break of the daily uptrend, stop goes below the low, then you target, obviously, the next levels upside. But that being said, you know, over and above that, if I'm looking for the longer term position trade, does it make sense? It definitely does make sense, right? So I do have some leaps on Meta, full disclaimer. Around 630, you're trading a very low forward price to earnings, a quite low PEG ratio as well, and Meta is down tremendously from the all-time highs. Still 20% off the all-time highs, right? So still a nice area for some longer-term Meta shares if you enjoy this company, or some longer duration trades as well. Moving on to Microsoft. Microsoft, almost 2% higher on the day. Very nice day, reclaiming the 200-day moving average. That being said, daily downtrend is still pronounced. It's a nice bounce attempt by the bulls, but nothing to scream home about, right? Only a, between the 38.2 and the 50% bounce, where I really start getting interested for the bulls. If they pull a 618 to 782, then the bulls have a great odds of shifting this to a new daily uptrend. But as of right now, it's good. The way that we framed this trade recently is that, without confirmation, it's tough to go for the short-term swing trades and call this the bottom. However, Microsoft was daily oversold conditions. That doesn't happen too often. Once there, that was the bottom. This one here, that was the bottom as well. And all the way back there, 2023, this was also a local bottom area. So if you're just using that to build some long-term shares or possibly some leap call options, as I did, well, it's a fairly good first entry, but you always got to keep in mind, you might have to DCA if they go for a full retracement. If this trend just does continue, you go for the full retracement size down into support, which is 450 down to about 430. That would not be too crazy, right? I've been waiting for Microsoft this entire time to come down into the 12 EMA to this support range pocket. So I have been buying here. It's the whole pocket. We're not trying to get the absolute bottom and load up everything at the absolute bottom. No, it's a range, right? So we play it kind of as a accumulation range overall. That being said, at 470, where we were, the valuation finally came under 30. Up here, it was closer to 40. Now we're closer to 35 rather. Now it's under 30, a 1.66 peg. I like the valuation down here. It's what I've been waiting for. And as a result, I am buying more Microsoft, which is something that I haven't been able to say for a while, a few months, as a matter of fact. Moving on to Netflix. Netflix, another stock presenting some very decent opportunities in my opinion. Now, what is true is that we are still in a daily downtrend, and we don't really have that much of a bounce going for us, right? The weekly also is in full bear control right now. We are not really oversold at all. It's just a daily downtrend, a weekly downtrend, and monthly consolidation too. However, we can use historical averages to determine, well, in the context of bull markets, is it a good time to be starting positions on Netflix? From the 12 down through support here to about $100? Yes, and I will be accumulating more Netflix shares. I wasn't able to do that up here, but I'm able to do it now. So Netflix, also one of my favorite positions moving forward to accumulate some positions that I can carry 2026, 2027, right? I like to play these technical pullbacks when the fundamentals also become manageable again. A low 30s multiple, a 1.62 peg. At this current stage, the valuation is much more manageable than when it was up here when Netflix was trading above a 40 price to earnings. And that being said, Netflix is still a nice 21% off the highs. Moving on to NVIDIA right now. NVIDIA, strong push today, 1.37%, but still, it's a battle of the short-term headlines between NVIDIA, between Google, the AI narrative, Michael Burry, et cetera, et cetera, et cetera, et cetera. Some days people love AI. Some people hate AI. Some days people say it's the future. Some day people say it's overvalued and it's a bubble, right? Whole bunch of competing narratives right now. One thing's for sure, though. The valuation of NVIDIA here is quite compelling. At 180, you're looking at a 26 forward price to earnings, a 1.15 peg, which means that NVIDIA is at one of the cheapest prices it's been in a long time fundamentally, right? That being said, we haven't gone anywhere in the last 6 months. So not only is it a nice fundamental buy, but also technically speaking, right, it's a nice consolidation range. So I've been accumulating a bit of NVIDIA at these levels in terms of shares and leap call contracts as well. This is the last time this week that I'll speak about the leap call contracts because I want you guys to be able to identify them on your own. We also do a lot of those in our Discord as well. That being said, NVIDIA needs to change the trend, right? It's been a daily downtrend, big daily downtrend, and the bounce size is not that pronounced. This is still resistance right here, 184 down to 178. If you move a bit lower, I still think it's a phenomenal opportunity to be selling some put options below the support lows, and that would just bring us into more full and rounded monthly consolidation into the 12 EMA, which right now is about 155. But this whole, 170 down to 150 region, really nice area for NVIDIA if they do move down there. But I'm already starting to position right now. Moving on to Tesla real quick. Tesla up about 1.71. Tesla trying to go for the daily breakout and trying to go for the breakout out of resistance, right? This whole 425, 430, let's call it, down about 415. This whole area has been a very strong area. First for the bulls, now for the bears to defend. But the bulls are looking to knock on this door and get let through, right? Daily MACD is crossing right now, so Tesla could be interesting for a bit of a momentum trade, right? Especially if you're establishing a stop loss and going for the possible break of 500, which would just be a monthly continuation trade overall, right? Monthly continuation trade. So it's a big trade. Nevertheless, it doesn't look too bad right now on the charts. Just make sure that if you are trading these breakout patterns, right, or monthly continuation patterns, that you are employing the use of a stop loss, because if you're wrong, then monthly consolidation will extend down here into the lower range of support, 360 down to 340. Moving on to Palantir right now. Palantir, 1.36% to the upside. Still, though, a daily downtrend, but a nice bounce by Palantir. Got to give it to him, right? A very nice bounce. That is a 786 retracement size. So in the event that the bulls get rejected here at big resistance, call it 186 down to 170, if you get rejected and need to get a bit more momentum before trying it again, you're working with a lot of space, right? So we'll see if the bulls have it in them to reverse that trend. The weekly trend obviously is no longer in their favor. They lost that when they flushed this 170. And now it's just weekly consolidation and monthly consolidation at the same time. Something that Palantir arguably desperately needed, right? Was big monthly overbought. Weekly was not quite overbought, but still you had some nasty divergence here for a while. And now it's finally sold off. So Palantir, not the worst opportunity if this is a stock that you like. I will never be able to say that this stock is cheap fundamentally speaking, but I can say it has a very strong product. It's one of a kind, a very strong management team as well. Very strong rule of 40. Their numbers are staggering, of course, but the valuation is a bit tough to get behind for some people. However, if you do enjoy this valuation and you don't mind playing it, short puts down here, 150 to 140, not too bad, right? And maybe adding some shares down there, also not the worst proposition if you are a proponent in the long-term thesis of Palantir being a $1 trillion plus company, then it makes sense. If you don't believe in the thesis, well, then you're never going to be able to get behind these valuations nor this story. So it's not for everybody. For those of you that it is for, I'll just give you guys some levels to kind of work off of. Moving on to SOFI right now. SOFI had a pretty good day all day, and then they kind of faded into the close. Rejection from resistance here, 30 down about 28, but we've known that level to be quite challenging, right? It was big resistance. The bulls tried to use it as support for a while into the earnings and then after, and then we kind of unwound, right? But nice bounce here by the bulls, looking to get the engulfing move from the daily downtrend. Nice move. If you reject from here and have to gather a bit more strength, you might go right back into the gulag, into the big chop zone. And if we come back down here, it may just be another phenomenal buying opportunity for SOFI or selling some put options down here as, right, this has been the consolidation range. I'm a big fan of selling puts 25 down to the low 20s. It's really nice support from the previous cycle resistance highs in 2021. And also the valuation lines up too, right, at $27. It's a forward 1.1 peg and a forward 7.5 roughly on the price to sales. Not too bad at all. So I've been playing the heck out of SOFI short puts down there. And if we wanted to accumulate some shares, well, it would not be the worst proposition if you are going for the long-term expansion of the business into $40, $50 billion market caps plus, right? Moving on to Uber right now. Uber, nice little bounce here off the lows. Today they were up 2.35%. Coming out of daily oversold conditions. Usually when you can line up a few things on Uber, it has been nice buying opportunities, right? You can see these daily oversold conditions there, right? That was close to a bottom, right? When you get the daily oversold conditions there, close to a bottom, get daily oversold conditions here, close to a bottom and to a bounce. So, right, we do want to play these oversold conditions. I was saying I was playing some short puts or would be interested in playing some short puts down there. And it's worked out so well. It's worked out well so far. And additionally, guys, the valuation of Uber at 83 is not too bad. Low 20s multiple, 1.5 peg, 5% free cash yield. It's good. So the technicals, monthly pullbacks into the 12, right? We've been talking about this one for a while, a long time, right? Nice monthly pullback. The technicals line up, the fundamentals line up. You get daily oversold conditions. That's what I like to call confluence. And usually when you find the most amount of confluence factors, you can line up the best structural swing trades. I'm not talking about little day trades like this. No. When you're going for the big moves, right? The big legs of expansion type of thing, which is what we kind of focus on the channel, right? Being able to identify larger periods of consolidation on some of these names and some of the indexes as well. Longer periods of consolidation into longer periods of expansion. That way you guys don't have to flip out of positions every single day. Nothing wrong with day trading, right? Or short-term trading, it's fine. I like to go for the big extended gains though, right? Identify a nice level that I wait for patiently, then I can just ride the gains for weeks and months into larger levels overall. Moving into TSM right now. TSM, decent day, 1.85% during regular trading. We had the daily downtrend. They cracked the lows right here, cracked the moving averages as well. And now, nice engulfing move. So reclaiming the moving averages, reclaiming some of these support levels, although it's very choppy. I'll agree with you guys, right? Extremely choppy chart right there. We'll see if they can actually convert the daily MACD, excuse me. Not looking too bad, right? Daily MACD cross is the same concept on a lot of these stocks. So maybe, just maybe, that's the end of weekly consolidation, similar as it was back here, barely making its way into the weekly 12 EMA, as it did right here too. And that's a weekly downtrend. If the bulls can reverse this, number one, right, and get some weekly momentum back, well, maybe that was also the end of monthly consolidation too. Sadly, it did not come low enough for my liking. I was waiting for 250 to 240, but that's okay. Many other stocks did come into my levels, and I'm glad to play those instead. I'm still not selling any of my TSMC shares. For the long term, it's too high quality of a company right now. At $2.95, it's not even that expensive, right? It's a 28 forward price to earnings, a 1.7 peg. So it's not as if you're paying like a 2 peg or a 3 peg for TSMC, right? It's still fairly valued. I'm keeping all my shares. I'm just not really adding any more up here, nor am I doing any swing trades. I have other large swing trades on all other names that have pulled back a little bit more and that offer, in my opinion, either better valuations, better technicals, or a combination of both, but a very high quality company nevertheless. That's everything for your overall market rundown. Hopefully you enjoyed. Now, let's get into your guys' favorite section, the biggest losers and gainers of the day. So we're going to start off with the losers of the day. I'm not going to go through every single one of these names, just some of the names that I kind of prefer for various reasons and different timelines. Number one, talking about Reddit, right? So Reddit on the monthly charts, clear monthly uptrend. We literally just came out of a back test down here of the 175 region. This one is pretty decent if we're looking for selling some options down here, but even for a longer term buy, right? If this is your style of company, phenomenal advertising growth for this company, phenomenal revenue growth, and other user metric growth as well. Around where we are right now, the valuation is really not too bad. So if you're looking for a fast growing company that is, you know, it's a high beta name, let's be honest, right? But I mean, the growth of the company speaks for itself right now. EPS flipping positive for the next few years, and revenue growth should be quite staggering. The valuation is not all that bad, but it is going to be a heavy momentum name. So whether you want to play this one on the wheel on a bit of a back test down here for some short puts, you usually get some really good distance on Reddit. I'll be exploring that. Or just a few shares in terms of a longer duration trade that you're holding for the fundamental expansion of the business over the next few years. Not the worst component out there, that's for sure. Moving on further, we have some cybersecurity names that are down. We could talk about Sentinel-1. Sentinel-1 is probably my favorite like small cap cybersecurity name, especially for the wheel purpose, right? I usually like selling put options on this one below the $16, $15 range. So not too bad. Big support level down here. And overall though, guys, right? It's also not too bad in terms of the forward growth metrics of the company. You'll see right here that at 16, we did the valuation. It's pretty cheap for a cybersecurity company, right? I know the price action has been too favorable, but there are other cybersecurity companies as well that I'm keeping a very close eye on. You guys know probably by now. I'm a big fan of Rubrik. Rubrik has some pretty big growth ahead of it as of right now. Currently around 65, 68. You would be trading around like an 8.5 forward price to sales multiple. Very high gross margins. This company soon, right? Well, not soon, but you know, sooner than later, will be coming into EPS profitability over the next few years. And also revenue growth is quite staggering for this business. So you're not really paying that much of a premium anymore. You'll see that all the analyst price targets are largely above the current price, and the monthly pullback has been quite decent, right? Cybersecurity has been kind of nowhere to be seen recently, a lot of these names. Other names might include Palo Alto Networks. Palo Alto, in my opinion, is a pretty good wheel trade. It's daily oversold conditions, right? So if ever we come down a little bit more and I can find my, you know, the level that I enjoy playing the most, which is like 175 down to 170 down here, huge support area for this company. Now it's not cheap, but I like the support range. It's a very dominant player in cybersecurity overall, them and CrowdStrike. And if I had to go for one of the two, the one that's closer to a big area of support, right, would be Palo Alto Networks. So this one could be an interesting little swing trade, or possibly for some short put action down there. It's just something I'm keeping on my radar into the next few days, few weeks. So a lot of decent names down here in terms of cybersecurity. Airbnb is one that I keep on my watch list every week for short put purposes. Down here in the teens, right? We had their earnings not too long ago. Phenomenal company, in my opinion, guys. I mean, everybody knows Airbnb, right? Their earnings were really good. User growth metrics were really good. And around 125, the valuation is really not that egregious at all, right? Low 20s multiple for price to earnings, a 1.5 peg, a very beautiful free cash flow yield. So this one is quite decent, in my opinion, for farming some short puts, especially when you combine it with a very big level of support down there. So I will continue to do just as much in my own portfolio as well. Mercado Libre, we got to talk about it again, right? Mercado Libre is a buy, a very strong buy in my opinion. The valuation speaks for itself. We did it after earnings at 2,300. It's now 10+% lower than there. So take 10% off this forward PE, take 10% off this already super low peg. It's under 1. It's ridiculous. Price of sales is very cheap. Free cash flow yield is quite good for this company as well, guys. I mean, the growth on Mercado Libre, I know it's been, unfortunate price action recently, but that's when you always got to understand, right? Is it a price action problem, or is it a problem with the business fundamentally speaking? And it's definitely not a problem with the business fundamentally. All analyst price targets largely above the current stock price right now. Huge EPS growth for the next few years, and huge revenue growth as well as they scale their e-commerce and fintech platforms simultaneously. Mercado Libre does this, man. It likes to shake people out. 20% sell-offs has been happening a few times, right? The last one was tariffs, and now we get another one. So if anything, they're just offering some great buying opportunities for long-term portfolios. I'm not playing any options on this one. They're very expensive, but I am buying more shares for the long-term portfolios overall. Those are just a few names that I kind of wanted to cover that are on the downside today. Now, special shout out to some of the names that are on the highs today, right? Names like Symbotic. Look at Symbotic, man. Ridiculous weekly move from last week's lows to this week's highs after earnings. 80% move in a single week. This has to be one of the best performing companies in the entire market over the course of this most recent week. It is very, very tough to chase it up here, guys. So this one is gone. And it's not even a cheap company anymore. It's a $51 billion market cap company. And although the revenue growth is very strong, guys, eventually it's like, what do you want to pay for this at the end of the day, right? EPS doing okay, but still, price to earnings is very steep, right? And next year, they're only bringing in about $3 billion. The revenue growth rates are very strong, right? Very strong, but you're paying a lot for that forward growth. But Symbotic, a very strong robotics company, right? And we were kind of watching it down here as they pulled back. I didn't play it. I had many other things to play, but I just want to comment on the recent price action as to, can it keep going up? I mean, of course it can keep going up, right? But are you getting the best risk to reward? Probably not. Robinhood was a very decent bet that we were kind of talking about a lot during the most recent sell-off. It came down from the highs to where we were, 32%, which is a very nice monthly consolidation phase for the stock. It's been a while that Robinhood had a nice monthly consolidation candle, bringing the RSI down a little bit, bringing the weekly RSIs down a little bit, right? The weekly was a downtrend, and now the bulls are looking to reset. So one last chance to dance. If we backtest this area again, 115, maybe we can go for a bit of a swing trade long. But all you guys that have been watching my videos, I was saying, yeah, accumulating some shares for a longer term 2, 3, 4 year thesis as Robinhood builds out its offerings, right? In terms of the betting markets, in terms of its banking offerings, right? In terms of its expansions into Europe and possibly the Canadian markets as well. It's a longer term thesis for Robinhood, obviously. BMNR, I mean, we could talk about it, but this just really hinges on the recovery of Bitcoin and Ethereum. We'll see if the liquidity boost from the quantitative tightening cycle end and possibly the rate cuts will help these names. I do believe they will, but BMNR is going to be a whole lot more volatile than Ethereum, of course, because it has retail sentiment involved in it, right? Some of the larger players use BMNR options because there's not many options in crypto. I mean, there are, but then again, they're not very liquid. There's not that much size. So a lot of people use BMNR as a hedge for their other crypto bets. Anyways, it's a complex trade, but BMNR is a long-term cycle expansion thesis. So if your thesis is Ethereum 6,000, 8,000, 10,000 plus, and you want to use BMNR as a proxy, there's no problem in doing that, right? However, you just got to understand that you're maybe not looking for this, right? Maybe you're just looking for it to kind of mimic Ethereum on a slow stage recovery back to, first, 3,500, then 4,000, then plus. So this one is a bit of a longer term trade. We can talk about the data center bets. We've talked about these ad nauseum over the past few weeks, whether you're looking at CIFR, NBIS, CoreWeave, Iris Energy. As I was saying, I would pick your favorite one. The one that I'm going with is Iris Energy because I really enjoy their vertical integration to where they own all of their data centers, which is not the same thing you can say about NBIS and CoreWeave. Nothing against the other companies, guys, right? You guys are free to choose whichever horse you prefer in this race overall. I'm just a bigger fan of Iris Energy because of their low cost per kilowatt hour. They have a tremendous amount of deals with big tech. The other companies also have some good deals with big tech as well. But, this valuation down here around the 40 range, I mean, we covered it after earnings at 62 is pretty cheap, right? In the 40s, it is cheap, but it remains to be determined, right? Whether this is the actual bottom, whether we consolidate a little bit more. AI narrative is still somewhat cloudy, right? You got a lot of bears now, you got a lot of bulls right now, so it's been a battle on these names, but I am looking forward to build positions in this. If you guys like that one, we'll build some shares slowly as the price kind of moves down and we move further into possible monthly consolidation. And I mean, if your favorite one is CIFR, you can do the same thing. All of these are exactly the same, in my opinion. They should be built out slow. And if you're buying them, you should buy them for a long-term thesis. Some of you guys I know are just buying them for the rapid appreciation. I mean, just be careful because it could go either way at this point. Moving on to other names like Duolingo. Duolingo finally actually doing something. This has to be Duolingo's best day in like over a month and a half, since October the 8th, as a matter of fact, right? So is this the bottom of Duolingo? Tough to say, man, right? But I mean, they did come into a huge area of support, the IPO prices and all the price action from right there. So a nice little bounce, but suffice to say, right? Even though we're weekly oversold, we were daily oversold, massively daily oversold. Monthly, not quite, because it ran an absolute ton, right? We've unwound everything, man. From the highs to where we are now, 64%. So first step, man, right? You got to get the daily uptrend. Then you got to get a nice weekly bounce and reclaim this support area probably. Then get the weekly uptrend back. Very tough to say whether it's a cycle low. I'll remind you, this was a fundamental shift in the business, right? They said that they were next year, they're not going to focus so much on user monetization. They're going to focus on the experience. So obviously that left a bad taste in Wall Street's mouth. And obviously that left a bad taste in several investors' mouths, right? But if Duolingo is your style of company and you want to play a multi-year thesis on the company, it's up to you. You're not getting the worst price in the world right now. And the valuation has come down quite a bit, right? At 205, it was a 1.34 peg. Now it's not that bad. Not that bad, but still this play might be very bumpy over the next few quarters as well. And that's pretty much everything that I kind of wanted to cover today. I mean, shout out to Lemonade. I know a lot of you guys are probably in Lemonade. Lemonade is also a multi-year thesis play. $6 billion company. Many people say it can be a $10, $15, $20 billion company. I believe it. I can see it. Revenue growth rates definitely are there. They just have to do a better job of working towards profitability because as of right now, the path to profitability is still a ways away, right? 27, maybe not even maybe 2027, 2028. It is overbought in terms of analyst price targets. Some people don't believe these targets. They're very bullish on the company. So if you're buying a company like Lemonade, right? It's kind of like all these plays, Lemonade, Zeta, right? They're all good, but you got to be buying them with a multi-year thesis and you got to be buying them with conviction overall. We spoke about Elf Beauty recently. Elf Beauty is another one of my favorite picks leading into the next maybe 1, 2, 3 years, but it hinges on the recovery of the consumer, no recession, obviously, right? And just number 3, just these consumer discretionary stocks being more in favor, both with retail and with the institutions. And that can be said about all stocks in the consumer discretionary demographic, right? Names like Chipotle, names like the restaurants and things like that, names like the apparel brands, names like Nike, names like Decker's Outdoor Brands, names like On Running, et cetera, right? These are all the same trade at the end of the day. It is consumer discretionary. So pick your favorite names, arguably names that are not beholden to or can't easily be, focus on the business models, right? Don't focus so much on the fashion trends, especially when you're playing apparel or food. Don't focus so much on the fashion trends or what's trendy at the moment, because what might be trendy at the moment may not be trending in the future. Pay attention to the business models. The reason that I like Elf Beauty or the reason that I like companies like TJX is because the business, or the reasons that I like Louis Vuitton is because it's the business models. They do not rely on one single trend, consumer trend, to be successful in terms of the long-term future. They focus on the business models. Elf Beauty's business model is disrupting the cosmetics industry, right? Providing arguably the same quality as high-priced items at a fraction of the cost, which does appeal to the newer demographics such as millennials, Gen Z, and under right now, especially when you talk about the rising, the rising cost of just everybody's lifestyle, right? So this is one that I like because of the business model. Overall, Louis Vuitton is one that I like because of the business model. It's not only Louis Vuitton handbags and Louis Vuitton brand. No, it's a conglomerate of 75 different luxury brands. You're playing the entire luxury market. TJX, the reason that I like it is not just because they have some pretty good clothes, right? No, it's literally because they have a good business model, right? Consumer discretionary spending has been soft. Thrifting is a nice trend as of the last few years, yes, but this company's always been strong. Why? Because it's the business model. They provide good value at good price points. They buy last year's or last season's collections of a lot of designer, well, not really designer, but a lot of, good brands like, Ralph Lauren or Calvin Klein or stuff like that. And they provide them at, reduced prices. And that's always a good thing, right? People are always looking for good deals, especially over the last few years. So this business model is very strong. So when you're looking at food companies, right? Like McDonald's, the reason I would buy McDonald's is because of the business model, right? When you're looking at food companies or apparel brands or anything consumer discretionary, try to focus on the actual business model of the company. And if there's a moat right there, right? Companies like Lululemon, the price can be very cheap. And you could argue that maybe it is ripe for a bit of appreciation, but is there a true moat here? Will their business model keep them alive for years and years to come, no matter who comes out with competitive products, right? So that's what you should focus on if you guys are focused on the retail trade. That's what a lot of people miss when they start trading discretionary stocks. They just focus on price. Oh my God, Kava sold off so much. Oh my God, Chipotle sold off so much. Oh my God, Lululemon is sold off so much. Yeah, but you guys are missing the fundamental thesis, right? If you want to have sustained gains, I'm not talking about short-term swing trade gains. If you want to have sustained gains, you got to have a business model that can stand the test of time, that can stand the impact of new competitors entering the market, can stand the impact of the fluctuations of trends, whether food trends, fashion trends, etc., etc., etc. And I think I'm going to kind of end it off right there, guys, because that's pretty much a lot of the companies that I wanted to talk about, a lot of the narratives that I wanted to talk about as well, right? So that's it. Hopefully you guys enjoyed today's video. If you did, consider dropping a like. Would appreciate it for the growth of the channel. Consider subscribing to the channel if you're new as well. We just crossed 10K. We're already almost at 11K subscribers, guys. So my Thanksgiving is giving thanks back to all you guys who have been engaging with the channel, giving me phenomenal feedback. I appreciate all of your positive comments, right? Your appreciation messages. I hope that over the last 2 years doing this YouTube channel that I've been able to provide a lot of value in the videos. And that you guys have learned some things maybe that you didn't learn or that you hadn't known about before. I always try to bring value. I always try to bring the information in an objective fashion, right? Not focusing too much on things that we can't control, such as politics or whatnot. No, just looking at price action, the valuation of companies, and how we can possibly extract some value and extract some money out of these markets, both in trading and long-term investing. So hopefully you guys have enjoyed the concepts that I've brought to you. And I'm looking forward to bringing you guys many more videos, but thank you so much for all the support that you guys have brought me so far. It's been a long journey, man, right? It's not easy starting YouTube sometimes when you have 0 subscribers or 25 or 100 or even 1,000 subscribers, right? But, we're finally here to a stage where I can say that the channel is starting to be recognized, right? Out there in the whole financial landscape. So let's keep going. I'll do my best to keep putting out the same quality videos that you guys are used to and that you guys know and that you guys love. But thank you so much for all of your support so far. If you guys are new to the channel, welcome, and I hope you consider subscribing as well. And last but not least, if you have any questions or comments, please feel free to leave them down below in the video description. I always love answering your guys' questions and comments and reading your feedback overall. And last but not least, if you guys were tired of trading in the markets all alone, you guys were interested in joining a trading and investing community of people just like you, with over 300 people in there that trade the markets every day, and we also build very long-term portfolios at the same time, you might consider joining our community. The link to the community is down below in the video description, and I have a huge Black Friday deal, the biggest sale that I've ever done, 40% off your first month. If you wanted to give it a try and see if the service is for you, well, you can use capital letters code Friday when you check out for joining our Discord service. The link is down below in the video description, of course. In terms of the Discord, what do you get when you join our trading and investing community? You get access to all of my trades. So where are we? We get all the swing trades, all the wheel trades, right? The wheel trades, the swing trades, the leap call options, trades for my YouTube portfolio, trades that I make in my big trading portfolio, my long-term portfolios as well. Everything that I ever do in my portfolios, for the most part, you guys get access to whenever I do it in the Discord, right? So here's just a rundown of the trades from the YouTube portfolio. I have separate sections here for large account trade ideas and other trade ideas in general, but these are the ones I take in the YouTube portfolio. So here's just a lot of the trades we've made over the past few months overall. You get access as well to our private morning live streams. Every Monday through Friday, I stream live at the open. I trade the markets live and also take all your questions on your stocks, your options, your long-term portfolios. So a lot of you guys ask me detailed questions in the markets. What do I think about this stock? What do I think about this option? What do I think about whatever's happening, right? Well, the live streams are a great place to ask me those questions, and I can answer you by going through the fundamentals, by going through the charts, by going through my thought process. So it's a great place to learn in a more active manner, because there's only so much that I can answer you guys in a memo in a comment section, right? So a lot of our members find great value in those live streams, especially when I answer a lot of those questions every morning. And after that, you get access to our chat rooms. If you guys can't attend the live streams, they're recorded. You can ask me all your questions in our chat rooms all throughout the day. I'm very fast to answer all of our members in there. You get access to our educational section, about 15 hours, guys, of all of my trading strategies for small, medium, large accounts. All the trading strategies are in there for the wheel, the call options, the debit spreads, everything I ever use. Also, technical analysis videos, fundamental analysis videos, how to build long-term portfolios, how to construct and allocate a trading portfolio as well, depending on your risk tolerance. So many educational videos in that section. Our members find really good value there. Our members get that as well. And last but not least, you get to copy all of my charts. All of them, literally all of them. Whenever you guys see some support resistance levels on hundreds of stocks, and whenever you see fundamental breakdowns of a bunch of stocks as well, like hundreds of stocks at this point as well, right? You can just copy paste all my charts, make them yours, copy paste all my watch lists. It takes 15 seconds and you can just copy paste everything that I have. Those are the main benefits and other benefits that I'm not talking about right now, but those are the main benefits, guys, of being in the Discord with us. So if any of that, if you would enjoy any of that, you might consider joining us with the link down below in the description. As I said, coupon code Friday in capital letters for 40% off your first month if you wanted to give it a try and join us in there. We have a lot of fun every day. So hopefully I see some of you guys in there soon. And if not, I'll see you right back here on the channel. That's it for me. Enjoy Thanksgiving, guys. Thanks as always for watching. Love you guys. Hopefully you guys have been doing well recently. Take care and peace.